Welcome to Yellow Tunnel and Tradespoon. My name is Mark Carpel. I'm CEO and founder of Yellow Tunnel and Tradespoon. And today we're going to have our weekly broadcast on this Tradier hub on how to trade stock, how to trade options, and we're also going to talk about earnings. Today's Nike earnings. So this is something we're going to discuss. Before we begin, let's look at the disclosures. This is for those of you who are new. This is a little bio about me. I think one of the main differences between Tradespoon and Yellow Tunnel and other subscriptions is that we are heavily invested into the technology and artificial intelligence and neural networks. So this is something that we're doing quite often. And we have a team of financial engineers that are building new models and enhancing existing models. And not only do we provide these signals, we also trade them in live trading room environment. Disclosures are important. Please read them. I'm going to try to restart broadcast for the closing bell. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered as FINRA nor CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Sorry about that.
I don't know about market. Hard to make it. You gotta have some deep markets.
All right, sorry for that message, but we should be good now. All right, let me share the right screen. Perfect. All right, so now that disclosure's out of the way, let's talk about current market conditions. So today we just had initial claims number, right? That came in. You can see home builders are flat after the initial claims numbers that come in line with expectation. And the market has been highly correlated to the interest rates. So if you look at the interest rates, let's look at the interest rates. They have been trading in a narrow range. Below 50-day moving average, below 200-day moving average.
Well, you're assuming that markets are going to stay.
Bob, welcome. How are you? Still below 50-day moving average, still below 200-day moving average. In terms of the yield, dollar has changed its course, right? It's divergent from the yield. Usually in the past 2 years, when yield was down, dollar is down. Now, because of the geopolitical risks and elections in Europe, we have euro and the Japanese yen continue to pull back, and dollar continue to retest all year-to-date high around 106. So that's a headwind for the market. And we also have Russell 2000 rebalancing. Right? We have Russell 2000 rebalancing where we have a lot of movements in the market. You've seen value stocks continue to underperform. Market to drop below 50-day moving average. We visited this triple top, important triple top, and now banks, energy, industrials are pulling back, partly due to rebalancing, partly due to the stronger dollar, weaker interest rates. QQQ is outperforming today, semiconductors are underperforming, and because of this rebalancing and rotation from value stocks to technology stocks, right, we've seen NVIDIA pulling back, kind of this gamma squeeze, where there were a lot of positioning, around 10% pullback, rebounded, retraced maybe close to half of its gains, and now pulling back. right? So Bitcoin is also pulling back, another proxy for risk taking, and Bitcoin continues to underperform. Any questions?
Well, let's cross certificates.
So you do see stocks like Google, right? We talked about Google today. Cool, Bob, how are you? It's getting an error message and trying to log in. Yes, it seems like we have, now it looks like it's resolving, but we're having more and more people joining. So we did have some issues logging in. Let me text our technical director. But joining now. So sorry for the delay. It looks like we have a GoToWebinar issues. Are we okay on the StreamYard broadcast? Yes. Okay, good. So Bob, but look like shortly we're joining. So Google is breaking out. So again, we're led by mega cap, some of the mega cap technology like Google. You can see similar price action in Microsoft. Microsoft is also breaking out to all-time highs. Apple, the same price action. So we do have rotation. Maybe some of the mega cap technology stocks are being sold off, like Nvidia and other semiconductors. I think Micron announced earnings. It's down today after the earnings announcement, even though it beat expectation and provided forward-looking guidance, but it was down as much as 7%. Pre-market. So that's the price action in Micron, and that's pushing the semiconductors are down. But again, it's not an indiscriminate pullback. We do have different rotations that's going on in the market right now. Any questions on Google? So I still think the market is in continuing uptrend. Right? Let's turn our attention to positioning. Right? Let's look at some of the positioning data. So Nike is announcing earnings. We talked about positioning in Nike, implying potentially 15% move to 110 as a high open interest around 108, 110, or the move to the downside in terms of positioning. So position data is important. And looking at the spiders, in terms of positioning data, similar approach. Let's pull that data in. You do have a support at 50-day moving average. So initial is 540 is your support, and then you do have the next level is 530. I don't know if you guys have any questions. So you can see the July 19th data. So in terms of key support and resistance levels, you do see first initial support is 540, right? That's the reactionary open price after the CPI data, better than expected CPI data. And then after that, the next level of support is 530. And that hasn't really changed in terms of key support and resistance levels. So let's look at the spiders. So basically, your initial support is this reactionary low that we talked about, 540, and then the next level is 530. In terms of the trades from today, So let's review some of the trades from today. As everybody's rebalancing, I'm also rebalancing. So let's just review some of these trades. So one is Nike. So I am in a Nike trade. It looks like I'm doing 75 and 80 and 85 put as a butterfly, right? And one of the reasons I'm doing the butterfly, because again, as you saw in the previous screen, there's a large position at the 110 call. And if you look at the implied volatility move, it also looks at the about $16 move. And let's just verify that again. Let's go to Tradier. Log in. Let's look at the chain. Let's look at the Nike implied move. So we're looking at the estimated movement analysis, looking at the historical volatility, implied volatility, and then open interest. Where there's a large open interest, the idea is that then you want to look at the dealer exposure, right? Are dealers long the gamma or they're short gamma? If dealers are short gamma, then if as a stock could it could pull the stock into the strike price, but it could be then as a repellent. And if the dealer are long gamma, then they are forced to buy stock, but forced to sell stock once it reaches the price. So Nike at 94, I'm adding a straddle, right? So it's $4 and $4, $8. So one standard deviation move, you just look at the straddle, which is $8. If you want to look at the two standard deviation, you also add a strangle, which is another close to $7, so $15. And that's where 94 plus 15, if you look at the positioning, this is where very large open interest is at 110 strike in the front weekly, but more importantly in the July expiration. Highest position is 10,000. So somebody bought 10,000, not somebody, but the net is 10,000 contracts where people open the position and then close. And that's where majority of the concentration is. So if there's a positive news, then the stock can gravitate toward 110 strike. And that's the reason why I bought a 105, 110, 115 call spread for 29 cents and 57, 80, 85 for 34 cents. Let me know if you guys have any questions about Nike trade. So this is, again, similar trade to today, Walgreens Boot Alliance announced earnings. We looked at the position yesterday, implying only 15% move, but it's more because of the very large positioning and the high demand for calls. There was a very small demand for puts, and obviously with the negative results, the stock is down more than 24%. Any questions? Bob, thank you. Cecile, cool. Patrick, sorry about the issues with the login on the GoToWebinar. And Tradier Hub, I think we're okay in terms of the connection, so that's good. All right, any questions on Nike trade? So let's continue on. All right, Luis, all perfect here. Thank you. So next is Microsoft. So Microsoft is breaking out. I have August spread. I closed for $3.80. The stock continues to go higher. So I'm looking for 20 to 30% profit on these option spread strategies. So this is an example of the Microsoft trade. So I'm out of Microsoft trade. Google and Microsoft are breaking out. So potentially, we'll see. Was the Russell rebalancing? This could be a false breakout because it looks like Microsoft is reversing its trade, but I'm still bullish on Microsoft, and I would be buyer into pullbacks. Small caps are also fighting for the 50-day moving average, and we talked about again the participation. It's kind of still narrow participation by mostly mega cap, large cap, momentum names like LA Lilly, Goldman Sachs, General Electric, Microsoft, Nvidia of the world. Any questions on Microsoft? So this shows you how many stocks are above 50-day moving average, and you can see participation is pretty low. We're very close to April lows in terms of how broad the market rally is. So it's not very broad. Can you repeat Nike trade? Yes, so let's repeat Nike trade. You can see that the Nike trade is, it's a butterfly, so 175 put, 80 put, and 85 put, and the calls are 105, 115, and 110. So let's build that. Let's go back. So we look at the estimated move analysis, right? So let's just go back to the estimated move analysis. So again, 4 plus 4 is 8, 8 plus 3 is 11, 14, so 110. So I sold 110 call because this is where the highest open interest is. We saw it in July, expiration months. And I'm buying doing $5 butterfly in terms of spreads. And right now, you can put that trade. So I'm selling the middle strike 110 and buying 105 and 115. Think of it as two spreads, right? You have 105, 110 debit spread, which is bullish, and 105, 115 credit spread, which is bearish, right? Let's just review for a new profit and loss chart in terms of risk profile, where on the x-axis, on the x-axis, you have strike prices, right? You have a strike prices, and on the y-axis, profit and loss. So the middle strike, the 110, is where you have majority of the gain. The stock does move to standard deviation, $14, based on the implied movement analysis, and based on gamma exposure and positioning. It could gravitate toward 110, right? If it was a positive surprise, then this would be a profitable trade. Since I don't know whether the Nike is going to have a positive or negative surprise, right? On one hand, they have new, Michael Jordan footwear. They have a new product that they are very optimistic about it. But on the other hand, for the past few quarters, they complained that the sales in China has been slow, so that could be an issue. So for that reason, I did basically equidistant put spread, 80, 85, 75, because nobody is buying puts. So if you do have a negative surprise, like we had with Walgreens Put Alliance, right? Walgreens, the stock could be down, in this case, I think it's like four standard deviation. Walgreens usually doesn't move 25% to the downside. Any questions? All right, stop the camera. All right. So this is Nike. So biggest price action is in value stocks. You can see value stocks underperforming, fighting for the 50-day moving average. They were outperforming, right? We have this rotation. Nvidia sold off, value stocks rallying. Now Nvidia stabilizing, value stocks are pulling back. Let's see, what are the other trades? I talked about Microsoft, Royal Caribbean. right? I'm long Royal Caribbean. I trimmed half of the position. This was a signal from the. If you go to yellow tunnel, actually 2 days in a row, we had a signal in the RCL name using our active trader model. Again, this is a model that runs every day and provides bullish signals, and it sees which stocks can potentially outperform the market. So let's look at the aggressive power trader. So Royal Caribbean. So these are stocks that the model sees in potential uptrend, and you can actually see my orders in Royal Caribbean. Right? So I bought it for 159.35, closed half, looking for 1% profit, and then looking for 2% profit, and have an open order. So I'm long Royal Caribbean after the Carnival cruise. Stock continues to rally. So that's one of the models, right? We're trading around earnings. We're also trading aggressive power, weekly power trader, where the models with long signals based on different duration. So if you're short-term trader, medium-term trader, or long-term trader, we have different models. So AT&T, I'm out of AT&T. Also, in terms of positioning, you can see there's a lot of overhead resistance at the 19 level of AT&T. Right, so we can look at AT&T. Let's see if we can load our friends Tradier. Type in AT&T. So this is a spiders gamma exposure gamma levels on spiders, and then where there's a high open interest concentration. Let's look at AT&T 19. So if you look at the 19th strike, this is where there is a lot of positioning, and this is people selling calls, and especially with dividend. Right? It pays a high dividend, and usually after it pays dividend, the stock pulls back. So I think as it approaches 19, this is one of the reasons I closed the trade. If you're looking for dividend, you can sell calls against it. That would be okay. So that's the trade in the AT&T. I did Micron, same thing, Butterfly. Very important to kind of, some people say, well, it didn't, so let's look at Nike, right? You can look at Nike, right? Very similar setup to Micron, right? And Wolfgang Buddha Alliance. Just because you have high open interest, that doesn't guarantee that it's going to gravitate toward that level, right? So this just shows you how people are positioning and what is the distribution of possible outcomes, right? So if there is a positive surprise and all of a sudden China is reopening and China has been in strong uptrend for the past couple of months, right? Strong uptrend. So it could be that China, Nike is doing better in China, and you're going to have a positive surprise. And in this case, since dealers are short gamma, they're forced to buy, which could push the stock above 100, right? You see these spikes at 108 and 110 level, right? So somewhere between 105 and 110, there is a high positioning, and that could act as a kind of a force where dealers are forced to buy the stock, and that's why it would gravitate to 110. In the example of not GameStop, but in the example of Wolfgang Buddha Alliance, it obviously acted as a repellent, and once it reached the short strike, it continued to move to the downside. And same thing on the put side, right? There's no put buying. Everybody's selling puts. They're very optimistic about Nike. So any negative surprise, like Wolfgang Buddha Alliance, and the stock could approach, somewhere between 85 and large positions at 80. And that's the reasoning for these positioning, right? And the strike price selection is probably one of the most challenging tasks when it comes to trading options, right? Expiration months, based on your view, based on the earnings, you can do weekly options, you can do monthly options. Monthly options usually 50 days till expiration. Weekly options usually this week or next week. But selecting strike price takes, effort, right? And so one of the ways to do this is looking at the gamma exposure, right? Look at the high levels where there's a high open interest. Any questions? Any questions about Nike, Royal Caribbean, Micron, Trade, RCL, and FedEx, right? So FedEx was an example where there was very high open interest. I did 280, 290 call spread, and the stock in this example actually worked exactly how the positioning was done. It's slightly overshot. Actually, I think I should have selected 290 based on 2 standard deviation, but it was very high open interest at 280 and 300 level, right? And it's trading right in the middle of that level and still at the 290 level. Right? Still at the 290 level as of today. Any questions? Gold is also rebounding today. Silver rebounding today. Regional banks are pulling back. IWM is pulling back. Daily stocks are underperforming, so a little divergence. Let's see some of the other stocks. The other positions I'm managing. So let's review them. So we talked about Microsoft. HPQ continues to underperform, right? It's trading near the open price, gave up most of the gains after the earnings. Texas Instrument is trading higher. It's up 30 basis points, sitting at the support. So I do have a call spread that expires in July. So at this point, my goal is to close the July positions. And if I'm still bullish, I can roll them into the future, right? I can roll them into August. But July position, you do have to make a decision. Usually 10 days before the expiration, you're going to close the position. So it's sitting at the support. I'm waiting for a bounce back. Goldman Sachs, right, which I trimmed the position when there was an overhead resistance. It's back to the 50-day moving average. Looking for stabilization. If I do see a couple more days where it's not making new lows, I think this is a good candidate to buy back those shares that I trimmed. General Electric is trying to rebound, fighting for the 50-day moving average. I do have a long stock position. Amazon continues to lead the market, continues to break out, right? 2 days in a row, up 2%. Similar prices action in Google. So Microsoft, Google, and Amazon are leading the tech to the upside. Bob's favorite NVO continues its march forward, right? So it broke out. This is one of my position is an NVO. Breakout, trading at the breakout level. Still strong medium-term, long-term bullish momentum. Same thing with LA Lilly. Silver is stabilizing, right? Silver is close to 50-day moving average, and energy is flat today. Looks like Germany is catching a bit, right? It's all about the elections, but it's not making new lows. It's sitting at April lows. I think long-term Germany is a buy, right? It's a pretty sharp pullback. I don't think European Union is going to fall apart. So maybe this is an opportunity to, especially if you're medium-term to long-term investor, maybe that's an opportunity to go long. I am bullish and have a position in Germany as well, my personal account. Cool, thank you. Lots of money lost on micro speculation. Well, the idea, again, I'm not sure what lots of money lost on speculation, but you have to keep in mind that the rules are very important, right? And I propose, no matter what you trade in, structure your trade where you not risking more than 2.5% of your account value, right? In all of these disclosures and in all of the webinars that I'm teaching, the idea is that Nike, Micron, Adobe, LA, Oracle, these are all trades that there is a certain distribution of outcomes, but none of it is, 100% certainty. So, sorry, my laptop is about to die. So I don't want to lose you guys. Just get some energy. But the point is that you have to be disciplined, right? You always want to invest the same amount. Right? Find the trades based on probability and return of capital. Right, so that's very important. All right, I'm not going to lose you. I still have the energy. How's the StreamYard doing? Tradier Hub, they're good. Looks like the majority of the people joined me back on the Yellow Tunnel platform. Thank you. Although in general, did not meet targets for most of your trades. I agree, but you know, I mean, when you trade earnings strategy, you always confronted with the choice: am I long the volatility or am I short the volatility? Right? Do I pay debit or do I pay credit? So Micron is a perfect example of where there's a lot of expectation in the stock because of the AI optimism, right, and participation. You can see the stock beat on the bottom and top provided forward guidance, but the stock is down. The other stocks like HPQ or Supermicro Computers or NVIDIA, they did move close to 2 standard deviations. Micron, in this case, did not. You know, would I do something different? Would I execute a sell strategy? No, I would not. You know, calendar spreads, fine. Butterflies, fine. It's all about probability of success and return on capital. You can clearly see that in the example of whether it's Micron or if, an example of the Nike that I'm doing, the setup is very similar. Right, the setup is very similar. Is that right? FedEx, Nike. I mean, FedEx worked out well, right? I was able to make profit, but the setup in terms of the risk, I'm risking 34 cents and 29 cents. So I'm risking 60 cents, right? 63 cents to make $4.40. So this is where you could have this triple-digit returns, which happens rarely, right? You're supposed to disclose it, that happens rarely. But based on the market conditions, based on certain signature and patterns of behavior, based on certain mode or theme like AI, that probability is increased, right? It's not 100%, it's not 50-50, but it's not 2 standard deviations supposed to happen 1% of the time. Obviously, if you follow my trades in the past couple of weeks, it happens a lot more than 2% of the time, especially on AI theme. And not even AI, you know, FedEx or Walgreens, Boot Alliance are not AI stocks, but you can see market is, especially during summer, is thin, right? You don't have a lot of liquidity and you could have issues. All right, any questions on Nike trade? All right. Let's review some other positions that I have. Let's see if you want to make any adjustments. Okay. So we talked about FedEx. I'm out of FedEx. We talked about China. Right? China is in strong uptrend. Long, medium term. I think short term, it's in consolidation phase. Right? It's pulling back. Today, it's another leg down in China, down 2%. So I would watch this breakout level, which is important. Right? If you look at the weekly chart, let's zoom out. This is the lows from December of 23, right? The lows from December of 23. We were here on November 22. So this is important level, about 50% retracement. So if this breaks, potentially we could have another leg down to 24 levels. So I'm watching Nike. It's been China. It's been underperforming. I do have 26 put, so I am hedged. FXI is at 26, so at this point it's just a premium of the option, but at least short term I'm hedged. And I would consider, especially in the current market environment, consider to have hedges, like not being long the stock market. The idea is to be long and short the market. How you can be long and short the market with certain bias. Like if you're bullish on FXI, you buy a put, right? But if you buy a 26 put, then you can give yourself more room to react to the stock market. We talked about GE fighting for the 50-day moving average. I have August position in the stock. We talked about Goldman Sachs, HPQ is consolidating. We talked about Micron, Butterfly. We talked about Nike, Butterfly. So loan NVO, loan RCL. Oh, I still have AT&T. Okay, I still have a small position in AT&T. And sorry about that. And loan Texas Instruments. Any questions about the positions? Any questions in general? Tradier Hub, you can post your question. We have a YouTube channel, or you can, we'll be more than happy to answer it. Any other questions? All right, let's see. Let's look at the market then in general. So, I mean, the good news is that yield is down. Right? Kind of hovering, 10-year yield is hovering between 420 and this breakout level, 435, two levels. TLT closed the gap, rebounding. High yield is stable. That's positive for the market. Right? It's a TLT is above 50-day moving average, above 200-day, 50-day moving average, above 200-day moving average. High yield is stable. VIX complacent, right? 12 handle. Value stocks, sharp pullback in value stocks. Semiconductors and Micron earnings are continuing to trade lower. Spiders flat. People are rotating into small caps and regional banks today, probably due to Russell 2000 rebalancing. It's been volatile. Gold and gold miners are rebounding. Obviously, we'll follow this shortly. Copper is down. And in terms of the next news, let's look at the next news. That can move the market. I mean, we do have PC data. I don't think it's going to be a big surprise because it's for the months of May. We already know CPI and PPI came in better than expected, but inflation is cooling off. So I think it will be the next week's data, which would be unemployment data, right? Unemployment data, we have Powell speak in Portugal, and Fed meeting minutes could spark some volatility, but I think main data point is CPI, PPI data, and unemployment. So next Friday we have unemployment, and then we have CPI, PPI data. So we talked about China, we talked about VIX, industrials, QQQ, spiders. Regional banks are fighting for the 50-day moving average. Banks are below 50-day moving average. Airlines have been under pressure. They're trading below 50-day moving average. Goldman Sachs pullback today. SCL. Micron. FedEx. Okay, that's about it. All right, any other questions? General EWT. So Taiwan I think it follows FXI, but it's been outperforming. FXI, SMI, Swiss market. I'm not sure if there's a correlation between Swiss, unless you meant SMH. Right? Maybe you meant SMH. Swiss, I don't know if there shouldn't be any correlation between Taiwan and semiconductor in Taiwan, but China and Taiwan and SMH, there's some correlation. SMH, yeah. Thank you, Bob. All right, any other questions? All right, if there are no other questions, I'd like to kind of end it here. Thank you very much on Tradier Hub participation, Discord, guys, and GoToWebinar, guys. Thank you very much, and I'll see you tomorrow. Thank you.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.